Sellers have finally materialized in ES, in the index. We've been looking for this all week. Finally get some selling today. There was a bit of a, what I call a micro pullback during yesterday's session, pretty much totally absorbed into the close. We saw that bit of a V-shaped recovery there into the close. This morning, what we had was a gap higher following some economic data. Essentially, what you want to see when price is gapping higher is whether or not the gap is going to hold. I call this essentially gap rules. And what that means is I'm just looking to assess right off the open, is the gap looking to hold or not? So in a scenario like this, you'd usually want to see buying right off of the open to make the call that the gap was going to be holding. Now, in this case, you can see the 5-minute bar here right off the open. Pretty much a sell bar tells us that the gap is most likely going to fill. That's exactly what we saw this morning. The gap fills right there into 43.95. You get a bit of a bounce, but no real acceptance then back above prior day high. And that was kind of the main signal for today. We came into the session with the primary focus of 4,400 and prior day high. You can kind of see that prior day high level that I have here on the chart. So gap higher, rejected immediately. All bounce attempts did not materialize back up through that prior day high, telling us that, yeah, this thing definitely could sell off. We just need some type of spark. That came with the 30-year bond auction. You do get a big sell there. A little bit of a retracement to be expected after a big sell-off like that. Remember, the index is a mean reverting instrument. It is always going to return to the mean. So it's not unusual to see a bit of a bounce there when you have a pretty volatile sell-off. So retrace about half of that sell-off, again, from the bond auction. And then once Powell starts to speak, we just end up closing down into the lows with no real bounce here. So the question becomes, what's next? Is this actually going to be a breakdown on the daily time frame chart, or is this just a much needed pullback after what was 9 consecutive days higher? And so for that, essentially what I'm going to be doing tomorrow is just looking at how price trades versus this area right through here. We do have some structural support from Monday's session as well as last Friday's session in the 43.63 area. Now, the real important level to be watching is actually the gap down below Friday's low. And I believe, if I'm not mistaken, that is where this, what is the low here? The low is 4358.25. So that's the level to be watching during tomorrow's session, assuming there's not too much overnight activity, assuming, it doesn't break down overnight. So essentially, to reiterate, what I'm going to be looking at is whether or not, let me get the rectangle out here, this area holds as support. We want to see if buyers are stepping in to defend this zone. If not, the gap fill trade will be fairly straightforward. That will be a pretty easy setup down into 43.40. And if I'm not mistaken, the 200 MA sits right around there as well. Yep, 200 MA is right there. So we'll be looking again for a potential bounce there if the near-term range does break down. So that's the main watch heading into tomorrow. Right now, looks like price closing in on session lows again. We may get a bit of a flush here into the close. As far as the actual daily chart is concerned, when I take the drawings off, what you can see here, again, like we've been talking about all week, there's a major daily pivot. Major daily pivot right here, 4,400, 4,420. Essentially big rally into that zone. It's unlikely that you see continuation higher without some sort of consolidation. So today's daily bar is looking pretty bearish, but within the grand scheme of this rally, let's take a look. As far as, fibs are concerned, this pullback is still incredibly shallow, right? Not much to really write home about. Now, one thing that is kind of interesting here is if we look at the 50% retracement of this recent rally, it kind of puts us near that early October low, which then you would have kind of a what would be known as inverse head and shoulders, right? There's your shoulder, there would be your head, and then just kind of thinking out loud here, there would be your next shoulder before retesting the neckline right there. So that's one possible scenario. Again, this is never a prediction, just you want to keep an open mind about how price can unfold. As far as near-term action, we're just pretty much going to be coming into tomorrow's session looking at today's session low and trading versus today's session low. Now let's get a look at the tech heavy NQ, QQQ. So here's a really good example if you've been following along with the commentary. I was talking earlier this week about the trend line in NQ and how I don't really like to trade trend line breakouts. And this is exactly why. A break of a trend line does not necessarily signify the change of a trend. A trend is defined by a series of, in this case, lower highs. And so to actually break the trend, we would need sustained action above this most recent high, and we just did not see that. So if you are focused overly on trend lines, you're going to be long here thinking it's the breakout just to get walloped right into this area of resistance. So that's kind of a live example as to why we want to be focused on the actual pivots, right? Lower highs, higher lows, things like that, the actual daily pivots on the chart rather than, a trend line. Trend lines are always going to introduce a degree of subjectivity into your trading, and we want to stay as objective as possible when we're talking about price. So as far as NQ tomorrow, definitely rejecting this area, right? This resistance area. Pretty similar approach. You just want to see whether or not there's any follow through on today's sell bar, whether or not there's any weakness below today's low, essentially 15,250. And you can take it pretty much down into the 200 MA. The fast MA is there as well. And then maybe 15K. Now, one thing I do want to point out on NQ is you do have a big volume void right through here. And remember, these volume voids, they tend to fill quickly. So this is around 15,150. If that area fails, you can expect a fairly fast move down into 15K on NQ. So just some things to keep in mind. Let's get some eyeballs on SPY really quick as well. I had mentioned that this morning simply because I thought the visual was a little bit better than ES. We wanted to see whether or not buyers were going to continue above 438. Oh, look at the action versus 438, right? So now you see a big bearish engulfing candle. And again, the gap. Mind the gap. We have two unfilled gaps here on the daily chart from last week's rally. So there's going to be a lot of eyeballs on those gaps. We want to see how those are treated. Pretty much just takes us into QQQ. If there's any difference here versus NQ, there's definitely not. All right, same setup here, just a rejection of that most recent lower high. As far as individual names, I'm looking at AFRM as a second day play. We did see a nice move in this today. It was on the watch. We got a test of that PT2. It's pretty solid. Look at how we're closing, right? This is definitely a bearish candle. We might be able to go for the gap fill here on AFRM. That is a second day watch coin. Very similar setup. The long worked nicely today into PT2. We tested that fib level that we've been talking about. See the fib right through there. Now, again, bearish candle. The difference is that this one has a big base below it. And so I'd be more interested in looking at a potential bounce versus 88.5. So that's coin. We have DDOG inside day, just looking for a break of the inside day tomorrow. Very straightforward. Disney, second day play plus relative strength. So anytime you have relative strength, you want to be keeping an eye on those names, especially when the market is trending lower, at least for the session. So Disney showing great relative strength. Today we'll be looking for potential continuation above 90. Pretty straightforward. And then Uber, very similar. As far as the RS is concerned, relative strength, again, holding the breakout point. So Uber, I do like it up through 50. Again, on these relative strength names, they work better when you do have a strong market. So we would want to see the market bouncing tomorrow before grabbing those longs. That's pretty much it for the end of day scan, for the end of day recap. Again, main focus is going to be how ES trades versus near term range low. Pretty solid action today, all things considered, based off what we've seen earlier this week. I mean, today is definitely more of an active traders market. Despite all of the news, everything flying, levels work perfectly, right? Technicals always work simply because they are based on supply and demand. So you'll always see the levels working nicely regardless of whether or not there is any news flying. And so just want to make sure you have your levels pretty much pinpoint. Analysis is on point, and you should be able to make money in these higher volatility environments. All right. Hope everyone had a great day. I will see you tomorrow morning for the pre-market prep live stream. Take care.